E is environmental, the S is social, and G is governance. So it's the environmental social governance standard, and actually they score companies, they score people based on how well they do with their positions on the environment, on social issues, and on governance issues. And so if you do a good job, you get a good score. But this is where it becomes very interesting. There is a move, actually, the 7 largest banks in the U.S. have said that they will now start doing business, but specifically giving loans to people who have high ESG scores. Now, the E, environmental, generally we're talking about the movement to go green. And so if you were let's say, an oil company, a natural gas company, they will stop giving you loans because you're not clean energy anymore. They don't recognize you. Or if you want to take out, let's say, a loan for a car, if you're not getting a vehicle that is more in the direction of clean energy, if it's maybe not an electric vehicle or something else, then maybe they don't recognize that as a possibility for you to get that loan. But this is the idea, is they are now measuring people and really evaluating whether someone can even do business with you based on how you do with the environmental standard. The social standard are things like you might imagine in the midst of woke culture. The social scores deal with things like our realities of the LGBTQ plus community. And so if you don't do a good job in some of those social issues, if you're not in favor of some of those social agendas that are very liberal, that generally the Democrat Party is largely embracing, then they don't want to give you a good score. And governance is how well you do submitting to the basic operation of government, especially when it comes to the environment and social score. So an ESG score is what people are given, but literally people in the future, banks are now saying that they will evaluate all loans they give to people based on ESG scores. And if you don't have a good ESG score, then you might not get a loan. And this also becomes significant when there is a push to digitize all currency, right? To get away from physical dollars. And they're saying that, well, digitizing is really better because it's easier. You always can access it. You always have it with you. The problem is when it's digitized, it also can be frozen at any point. It can be taken away from you. And this is exactly what happens in China.